what are you guys doing right now? Give a sense of your scale in terms of how your clients are operating and how you're operating.
Range is a AI wealth management agent, effectively, that we're creating for high-income households. If you are between 35 and 50 years old, that's kind of the ICP we go after right now. We are building agentic workflows to replace human financial advisors. That is our goal. It's a pretty wild goal. If you talk to venture capitalists, some bet on you, some don't. That's okay. Frank and I are good friends. We really believe something different than what I think a lot of folks are trying to build in the wealth management space. A lot of companies are trying to build agentic workflows and AI tools to help financial advisors enhance their relationship with clients. I don't believe in that. I think the future of the world is a completely autonomous agentic experience with your wealth manager. And now, this is a very relationship-heavy industry, so how do you replace that personal touch? We get that a lot, mainly from wealth advisors. And I think, I think that's playing out. I think it depends on the audience you go after, the age demographic, their comfort with technology versus human beings. An example I give is stockbrokers, right? In the 90s and before, if you wanted to trade stocks, you had to call someone, right? These were licensed, credentialed folks moving tons of money for you. I've never called anyone at Robinhood. I've never called anyone at E-Trade. It doesn't exist anymore. So that wasn't even AI. That was just technology. And so we think the same can be true in the wealth industry. And there's countless examples where relationships have gone by the wayside due to software and will go by the wayside due to AI. And we think in the wealth management space, that's going to happen. It's playing out right now.
So talk to us about the transition point between today and tomorrow. How do you manage the balance? I mean, AI can give you infinite patience, incredible breadth, incredible depth, but it also makes mistakes. And getting over that trust bridge is hard. You've solved that, at least for now, with human beings as well, who are building that trust bridge with people like my colleague. How do you cross that bridge? What's that transition going to look like?
We're a compound startup, if you guys are not familiar with it. We do tax planning, investing strategies, financial planning, estate planning. We do it all. We can come back to why we've tackled such a wide breadth in a little bit. But we've been extremely deliberate over the last, we've been live for about 2.5 years. The company was started 4 years ago. We have about 20 financial advisors on staff from Goldman Sachs, UBS, JP Morgan, like eminently qualified advisors who are experts in their field. And the first thing we did was we realized we have to understand how financial advisors today work, right? What kind of financial planning tools do they use? What kind of tax planning tools do they use? And so we use third-party tools our first couple months to just service our clients and build the infrastructure of the business. Then what we started doing in early 2023 was we started ripping out third-party tools that your financial advisors are probably using candidly, and we started building our own tools with an AI layer and a backend where we control the technology completely. And so over the last 2 years, we have built our own financial planning tool. I would now contend that it is probably the most advanced financial planning tool on the internet. There's some statistics we can share around why we believe that. We've also started building our own tax planning engine. If you go to a CPA, if you ever want a tax plan from your CPA, they are using probably one of two systems out there. We've rebuilt that infrastructure. We have our own tax planning tool now at Range. Why do we do this? So first of all, speed of outcome is really important, like speed of information, delivering a financial plan, building a financial plan. These things take days, weeks, months in the traditional ecosystems. With us, we measure it in seconds and minutes now. And that speed allows us to service a lot more customers at a much lower cost. And that's really a big part of our mission, is democratizing access to this category, which has historically been reserved for the ultra wealthy. But anyways, tying it to Phil's talk a little bit earlier, like we had to build software that our AI could use in order to then communicate with customers. We couldn't just go straight to like an LLM wrapper and say, Amias, go ask Range to build a financial plan for you. I have no idea how it's going to do that. But now our AI agent is using our software, which we control the inputs, the assumptions, the outputs, to generate a plan. And I'm confident it will give you the right thing. And we have barriers and borders in terms of hallucinations and outputs that we don't like. And the human is quickly going to become a backstop. And we're pretty confident it's going to be better than your traditional wealth advisor. We've been working on it for 4 years. It's a big step function leap up in terms of like technology in the category. And the last thing I'll say around that, like the confidence, we know consumers will want confidence around this thing, right? There are many ways we're going to display that confidence. One thing we've been working on for about 2 years, this is, I guess, not proprietary if I say it right now, but it is what it is. In order to be a financial advisor in the US, you've got to pass the Series 7, 66, CFP exam, CPA exam. We've been building AI bots to beat these exams. And so you can train these agents specifically for these tests, but like some of these exams are very open-ended, right? And so our AI agents can now pass these exams with a 98% accuracy rate and 10,000 plus simulations. The average human advisor, the passing rate's a 72. So you mentioned accuracy. Humans make mistakes all the time. And so the question then is like, how good does the AI that we've built have to be in order for you all as consumers to trust it? It's probably got to be 98, 99 to 100% correct to compete with a human being. So I'll pause there, but like that's some of the ways
I think
we're building trust.
This is such a good example. Who in this room has a financial advisor, has ever talked to a financial advisor? Your financial advisor probably is fundamentally good at two things. One actually and one not really. The first is golf. The second is stock picking. So one, they are actually good at golf. They're probably quite good at golf. The truth is they are not good at stock picking. Now, ask your financial advisor the following question. I'm going to remodel my house. I have stocks with you. What is the right choice for me? A HELOC, a margin loan, or a cash out refi? The chance that your financial advisor, who is good at two things, really just one and a half things, can answer that question well is close to zero. Now, you take that same question to a CFP, probably they're actually going to be a lot better at it, but even that CFP is going to spend how many days thinking about researching on your behalf to answer that question for you?
A question like that, using traditional tools, probably 2 to 4 hours. And assuming it has all your data.
Right.
And
And
it's up to
how
date.
much does a CFP charge per hour?
If you go to a CFP, hourly rate's $300 an hour is the national average right now.
And if you're in McLean,
Double, depending where you are in McLean.
so this is where we come to. The first guy we just talked about, he's completely conflicted and he's out of his depth in the first question. The second person is incredibly expensive and probably hasn't answered that question in this market environment. Who here has taken a Waymo? Okay, so I haven't yet.
It's unbelievable.
How long did it take you to get comfortable?
I'm a technologist, right? We go up on the internet. So like I got in, I took a video. I probably rode in one a year and a half ago. It was the first time. Only in SF. I have a video of it. I posted on my Facebook to my friends and family. I was blown away. Like self-driving exists. This argument that self-driving is coming, it exists. Like you can go anywhere in SF. It'll pause for bikers. It'll go around trucks. It's unbelievable. It exists already. And
I got to tell you, driving is harder than financial planning, guys. Like it's true. Like every American adult can drive basically, and not every American adult can do financial plans. But I got to tell you, in terms of the the compute capacity it takes to drive, the speed, the decision making, the coordination, driving is harder than financial planning. Fahad, I want to ask you a business model question. So you guys have really cut your teeth on this central challenge that we're so excited about, which is trust and financial advice. Mm-hmm. But also you're a compound startup. You are offering wealth management. How do you balance the business model versus brand? Meaning the business model, it's better for your economics if you take BIPs in terms of asset management, but it's better for your brand if you have that gold standard CFP, we never get paid except for giving you advice. How do you balance that over time, both internally and then externally with your customers?
Yeah, I mean, fundamentally, people start businesses to solve a problem they inherently have, or they see a market opportunity that is just going unsolved. And so when we started Range, my co-founder David and I, David is ex-Amazon, ex-Twitch, ex-IBM engineer, geek. When we started this company, we wanted to solve a couple of problems. Number one, like I think the pricing in wealth management is extremely unfair. It's complex, it's not transparent, and it hasn't changed in 100 years. As an entrepreneur, when you see AUM-based pricing, it's been the same since like, I don't know, the 1920s, right? And so as an entrepreneur, you're like, there's something here. And as we scale, like what technology enables us to do, especially AI, is we can drop the price drastically. And I'd rather go for volume, help more people, build an incredible technology than eke out additional AUM bips from my customers. We want to solve a problem. You know, we want to help families and people do better with their money, do more with their money. And we just fundamentally believe in that. There are a lot of startups out there that have a million different schemes on capturing more AUM. And that's fine. There's absolutely actually nothing wrong with that. I just don't believe in that. You know, I believe in building amazing technology that can change the way we live. And if I can drop the price and help a lot more people do that, I'm happy with that decision. And so I think it's a personal choice for entrepreneurs in terms of how they pursue these opportunities.
All right, so we've got a lot of people in the world. The market's a little bit crazy. Yeah. It's up, it's down, it's down, it's up. What are the common mistakes you see people making in these times of real high volatility?
People ask so many questions when the markets are insanely volatile. And most financial advisors, what do they say? Don't do anything, right? And that's actually our advice. We're long-term planners. We're not hedge fund traders, right? Hedge funds love this environment. This is when they clean up, if they're good. For us, it's about the long term. We're long-term planners. We help 40-year-old families retire 30 years from now. And so most of the advice we give people is, if you liked the position a month ago, you're going to like it today. You're going to like it 9 years from now. Today won't matter, because that is the right thing to say to our clients as well.
So 10 years from now, human advisors, like, do they exist? Is it all AI? What's 10 years from now, where are we in terms of that human connection versus AI financial advice? Or what does it look like?
If you are under the age of 50 in 10 years, I think you probably won't have a human advisor. I think it's extremely unlikely.
Well, the good news / bad news is most Americans don't have a human advisor today. Obviously, you're starting with people who could have a financial advisor, but the real opportunity is what you said earlier. It's the democratization. This is not a market that is well served today.
Yeah. Related to that, I mean, the pricing on range.com right now, it's $3,000 to $10,000. It is not cheap, but relative to AUM, it's significantly cheap, right? 1% on $1 million, $10,000 a year, just for investment advice on that one account. It's not tax services, estate planning, insurance planning, none of that, which we also compound into our services. But still, you know, it's $3,000 just to get started with us. The way I think about it is, right now we are building Uber Black. If you remember, Uber, when they launched in 2009, it was Uber Black. It was $100 Escalade rides 5 blocks down the road for 40-year-olds, right? And they used that money and that profitability to build their matching algorithms, their pricing algorithms. And then they opened Uber Black in a couple different cities. And then they introduced the Toyota Corolla, and 50 million Americans got access to Uber X. And then they did Uber Pool, and then they did Uber Eats. And so that's kind of the way we're thinking about attacking the market is, okay, our $3,000 product today, by July, we're going to launch a $50 a month product. And then I'd love a free product for college kids, because our kids are not taught financial literacy in high school and college, and they're debt-ridden until they're 35 years old. That's a massive problem to solve, both for the country and for consumers. And so wealth advisors today are not doing that. They don't have technology. They're not going to stop. Like, their entire infrastructure, especially even at like mid-size RIAs, I'm not talking about Goldman or JP Morgan. I'm talking about Creative Planning, LPL, Mercer, the guy down the street that's your best friend. Their entire cost infrastructure is built on capturing AUM with a certain dollar amount, right? Mine isn't. Mine is built on AWS credits and tokenization of AI, right? And so I can attack the problem very differently, and we're excited to do that, you know?
What's a contrarian take or a bold take that you have relative to others you see out here?
I think our bet that you don't need a human being is actually the most contrarian bet I hear in the Valley still. 99% of the tooling and the startups that still approach them, it's all about helping human advisors be more enhanced. And my question's like, what are they actually doing at the end of the day if AI is taking over their entire job? Like, me talking to you, okay, it's a therapist's job. That's different. So I think the view that we're taking, which is putting the power in the hands of the consumer. Imagine Salesforce in your pocket for $5,000. Like, that is what we're doing. We fully believe in that world. I don't think most people are bought into that yet.